Hi, it's Brandon Sullivan, CFO at 2X, and you are listening to the CFO Thought Leader Podcast.
This is episode 1086.
Use capabilities. And so I think one of the most important things in this case is starting first with your people and saying, who is on this team? And let's make sure that we have the right understanding of the business process, the technical capabilities, and our impact on the customer. Right? If we mess up the impact of the customer and we negatively impact it, it's going to ruin everything. And it makes what could be a really great strategic and financial outcome on the business side, it makes it, worth nothing. So it has been part of the talk track every time we think about, all right, we have to bring these two organizations together. Unfortunately, there's overlap in roles. Let's make sure that we're intentional about it. Let's not be flip here. It's you're impacting individuals, you're impacting our products, you're impacting potential customers, and let's make sure that we minimize that risk. That is the first thing that we get after.
It wouldn't surprise me. No, it would be exciting. That's how Adam Ante responded when asked if 5 years from now, he could see himself still in the C-suite, but not as a CFO. Ante, who led Paycor through an IPO, a pandemic, and most recently a $4.1 billion sale to Paychex, may not just be closing the chapter on his CFO tenure. He may be swinging open the door to something entirely new. Later, Ante softened the sentiment, suggesting he might be surprised if he moved beyond finance. Still, his earlier candor reveals a finance leader attuned to operations and perhaps transformation. You'll hear CFO Adam Ante say those words and many more on today's episode when our talk begins after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus dollars back to customers in business building rewards. Make every dollar count with Brex.
Today, we welcome CFO Adam Ante back, a finance leader whose career has traversed an IPO, multiple M&A transactions, and the demands of scaling fast-growth organizations. Most recently, as CFO of Paycor, Adam helped guide the company through a data-driven transformation, weathered COVID-era changes, and ultimately steered it towards successful growth. With Paycor's recent acquisition by Paychex for roughly, or reported, $4.1 billion, Adam once again finds himself at the intersection of strategy, leadership, and of course, change. Adam, welcome.
Jack, thanks for having me. Glad to see you again.
Yeah, likewise, Adam. Thank you. We look forward to exploring your latest insights and next steps, Adam. But I just wanted to ask you up front here, as CFO, you play a key role during an acquisition, and we wonder what have been your priorities since Paychex announced the deal, and how do you measure the success through this transition? What's the outcome?
Yeah, thanks, Jack. So clearly there's going to be some clear financial goals that we're going after in terms of revenue growth and cost savings and synergies and an ability to unlock a new level of scale for our customers. I think the first thing to think about, though, is how the teams come together, getting the organization lined up, making sure that you have the right folks on your leadership team that can rally around those priorities and start to execute against the strategic priorities and the initiatives that you're going to lay out to run those strategies and achieve those goals. So the first thing is always the team. And then for us, as we're thinking about, what's first for us is really expanding our sales, continuing to invest in our sales, and then really focus on what we would call moments that matter for our customers. We want to build a flawless series of moments that matter to our customers so that they really engage well in the product and feel good about the service that we provide and the customer value proposition that we have for them.
Adam, to state the obvious here, often CFOs of acquired companies do move on. Could you share what factors influence whether you stay with the combined entity or pursue a new chapter elsewhere?
Well, yeah. So as we're getting acquired by Paychex and going through this transaction, they have a really great CFO already, Bob Schrader, who's been the CFO for a couple years there and been with the organization for a while. So going into it, they don't need another CFO, especially as two public companies coming together. And there's going to be, you want to create space for a lot of great folks who are in the organization to be able to move up and move on and continue to grow their careers. And so the first thing, honestly, that I was thinking as I went into the acquisition is that I would transition out of the organization and get into something else. I think actually my wife is expecting that we would plan some long summer vacation and that we'd be in Florida, or maybe she would drag us overseas or something. But in this case, actually, Paychex took the opportunity to say, hey, we really want somebody to run the business that has the experience with the whole organization that's a little bit more operationally and strategically focused. And the financial background, I think, really resonated with them as the senior leadership team and the board tried to think about where they wanted to take this strategic opportunity over the next 3 to 5 years and 10 years and beyond. And so they asked me to step into this leadership role and run the business as the managing director for Paycor broadly as a Paychex company. And so I was a little surprised, but also extremely humbled and excited for the opportunity. And so that's for me the path, and that's not always the path. Definitely for CFOs, I think when you go into transactions like this, you're expecting that your role is going away and that you're going to go do something else, and that's fine. That's what part of the role. I think if you're expecting to go into a private equity firm, then yeah, you're going to have a continued role there usually, and you're going to go run another transaction at some point. But when you're bringing two strategics together, I think the expectation as you're walking in is that they don't need another CFO. You should go do something else.
Yeah, agreed. Yeah, forgive me for not listening as closely as I should have. Did you say you're being tasked with leading a certain company component of this?
Well, so I'm going to run the Paycor business unit as like the line of business CEO in this case. Yeah. Yeah. Thank you.
And operationally minded, am I right? I mean, it looks like your operational credentials might have helped swing that door open.
I think so, for sure. Early in my career, I always followed my curiosities to understand how things worked. And I went after them with this sort of finance lens just because it resonated with me, with the data lens and an economics lens. But I started getting deeper and deeper and deeper into the operations. And so I spend a lot of time already with our business leaders around the operations, around sales strategies, thinking about, long-term strategies and how we build initiatives there, and then how the operations work. So I do think that played a big role for me in this opportunity to continue to move on and move my career in sort of a different direction.
Looking back now, if you wouldn't mind, what were the milestones for you? When there are certain accomplishments we all assume are milestones, and I speak to finance leaders, and it's often surprising sometimes. They shake their head, no, that wasn't it. Sum it up for us. What were the milestones for you?
Yeah, there's clearly some cool finance milestones. And at Paycor, we were able to do a couple that, you never know if they're really going to happen. We were able to take the company public. I was able to go through a private equity transaction and a complete recap of the company. We were able to do Paycor Stadium naming rights with the Bengals, the NFL Stadium naming rights. These are all really cool milestone moments. I think some of the things that really resonated over my entire career as these milestone moments were some of the failures, actually, some of the moments where I felt like I was behind or I didn't know what I was doing. And I remember a specific example where we had acquired a company out in Colorado. And so I was traveling to Denver every week for about a year and a half and wasn't really making the progress on the integration from a business standpoint that I personally wanted to make. And they brought in another CFO, a line of business CFO who I reported to, and she was fantastic. She taught me a lot, but I really felt like a failure at that moment because I was learning how to run the business versus think about just the strategy side or think about the data, really working with the leadership team. It was a new muscle for me. And so I felt like I was really failing. That was a milestone for me where I started to realize that running a business and operating a business is different than just running the financials in the background. So that was a really big milestone for me. One of the other big milestones was learning to take more ownership over the outcomes, especially as a finance person that does a lot of forecasting and planning. It feels like sort of this foreign thing that all of the work is happening up in the future somewhere else in some other group. But when you take ownership there, and I had this specific example where I felt like the product leader who I was working with to build a product business case wasn't taking the ownership that I was expecting. And I actually read this book. I had just read this book called Extreme Ownership by Jocko Willink. And that really changed my mindset from this moment of sort of receiving the financials, just thinking about the planning, just thinking about the forecasts and sort of the variance analysis to, hey, I actually need to own the outcome here with this person. And so how do I start thinking about that? So I remember reading that book in and of itself was a milestone moment for me in my career.
And, it's interesting. You recommend it. You were the first one on the podcast to recommend that going back years ago. You didn't have this piece of thought leadership before, but it seems like you were already of that mindset. And it just kind of validated some of what you had already known, or no? Was it a really, an eye-opening piece of thought leadership that led you down a path you didn't expect to go?
I do think that I bend that way naturally, just a little bit more. I think the book sort of helped it to come into light in terms of some of the specific thinking, the specific thought patterns, and also think about creating tools and ways of working that enable you to have those conversations without overreaching or seeming like, you could do that sort of stuff and come off as a jerk. You don't want to be a jerk. You want to be collaborative. So there's a way to drive ownership without taking everybody's stuff. And I think that's what that book really helped solidify for me and bring together. I think broadly, I've always had this, again, desire to learn and get into things and understand why things work and how we can be doing things differently or how I can help make things different. And I think that book sort of helped me to clarify that and then address it and work collaboratively with folks more effectively.
Do you think some of the thinking there as well, at this new chapter being opened here, this combined entity will likewise benefit from that, what that book has to offer? Or
I think that everybody could benefit from this idea of extreme ownership and stepping into other people's areas collaboratively with them versus sort of finger pointing, but working together well cross-functionally. I think everybody can. And Paychex is a really big organization. They are a historied organization. They've been together for more than 50 years, and they have a lot of different business lines, and they have a relatively new leadership team that I'm really excited about. And so I think our leadership team is going to now learn to work together and help each other and help identify areas that we can be more effective. And so we're all going to have to take this extreme ownership sort of mentality. Otherwise, things just sort of fall apart because you look over there and you say, oh, that's somebody else's responsibility or someone else will fix that. And when you're working as a leadership team, especially when you're first forming, I think you can't do that. You have to be willing to get into it with other folks. You have to be willing to call things out and say, hey, let's work on this together. And I think extreme ownership really helps to, again, clarify how you might be able to work like that.
It always seems as if deals come out of the blue or what have you, but frankly, sometimes they go back months, years frequently. And what can you tell us about the timeline here?
Yeah, the transaction itself has been going on in some sort of form for well over a year and a half, 2 years. And there's always conversations around this where you're talking to private equity firms or you're talking to other strategics, you're thinking about partnerships, and you're always looking for those opportunities, and you want to make sure that you have the right deal set up for your shareholders. You're always being intentional about your long-term growth prospects. And so we're always having these conversations in some sense. And what had happened with this transaction is that Paychex had been interested in Paycor as an opportunity, had been evaluating the market, looking for opportunities. And so as they identified Paycor, they actually reached out, and we had some conversations in the summer of 24. And the CEO of Paychex and the CEO of Paycor met and had lunch together and started talking about what the opportunities could look like if we were to come together. And that conversation really lasted a handful of months before we got a little bit more serious as a team, and it culminated ultimately in a bid for the business after some diligence. And then at that point, it sort of becomes really formal, right? And we take that bid and that work back to our board at Paycor, and we work through what are the opportunities. How should we think about this bid? How should we think about the opportunities for Paycor in the market? And this was maybe right before Thanksgiving of 24 in November. And so at that point, we started to get deeper into the analysis and the diligence. We did a market check, and we had to go out to a wide range of folks across other strategics and private equity firms to look for other potential buyers to make sure we were getting the best deal for the shareholders. And then after what could only be was like one day off over the course of 6 months, was Christmas Day of 24. That was really the only day we didn't work on the acquisition. Beyond that, it was full of diligence and conversations and going back and forth on the whole transaction. It ultimately culminated in the beginning of January, the signing of the transaction between Paycor and Paychex. So Paychex ultimately won the bid, and now we're working through the close. Hopefully we'll close the deal in the second quarter. The first half of the year is what we've been aiming towards, and so we're on track to do that right now.
Looking back, is there anything you would have done differently to navigate this process or advise CFOs who find themselves in a similar position?
The process is super long and complicated, and there's a big finance component of it, but it's also a lot of people and navigating and making sure that all of your constituents are sort of thought of well and considered. And so I think making sure that you're not rushing in with a simple finance lens and saying, valuations here, this is what this is. And you can take a broader step back and think about, well, who are your shareholders? What do they care about? How are your employees going to be impacted? Who are the people navigating the deal itself? And trying to find advisors who can make sure that, you have all of that thinking laid out so that you're being intentional about it. It's a much more complicated than just the finance aspects of in a deal this size. And that's why we're really excited about the transaction with Paychex. You want to find somebody that you can really work well with, that is a cultural fit, that has a good strategic fit, because otherwise it's going to be a mess after the transaction goes through, and it's not going to be the best thing for the shareholders. And so making sure as a finance leader that you're thinking about those things alongside your CEO, your board, your shareholders, and your employees, where you maybe naturally don't lean in as a finance leader, you got to be really intentional.
There are members of the C-suite, clearly the CEO, the CFO, who are very much involved in this process. And just back in time, though, are there corporate development people, or, is the initial engagement, does it happen lower and it kind of bubbles up to Adam, or is Adam and the CEO sort of, getting that connection? Or maybe it's a board member who comes to you, and I'm sure it can happen any different direction, but I'm curious if there's corporate development folks who are involved in the.
They're typically, like you said, Jack, it can happen any different ways. I think deals like this often come from, your private equity owner or your board member, other leaders on the team. It might be through some sort of a partnership conversation that boils up. In this case, for us, it was really a top-to-top conversation that happened between our private equity partner and our CEO, ultimately, that led us to have the conversations. One of the things that was really important to us as we were evaluating this is that we didn't get this out into the general public of our employee base, because it's not, most of these conversations don't amount to anything, and because we've had lots of them over the years, and you don't want to disrupt the business and get people worried while we don't know if we have anything to think about yet. And so we tried to really limit the number of people that needed to be involved. So it was me as the CFO and our CEO. Our chief product officer came in, to talk a little bit more in depth about the product and the technology. And then we had one key leader, Brandon Young, who runs my FP&A organization that we've worked with for a long time. We went through the IPO together, and we spent a lot of time just working specifically on data, pulling requests, diligence together. So it was really just a core couple of folks who knew about the deal and were working through the diligence aspects of it so that we could limit the disruption until we really needed to get deeper in the work.
Similarly, I was asking you about how the information, the engagement initially happens, and you explained how at one point during the process, it was important to reach out to other potential parties who might be interested in acquiring the company. There might be a better match. There might be, more greater value perceived, whether it's the board members or the private equity folks and their contacts, to reach out to other companies in this ecosystem. And where is the CFO? The CFO at all times is, being briefed.
Yeah, absolutely. So it does work like that in a sense. And we brought in a strategic partner, an outside partner, an investment bank to help us navigate this process. It's really complex. There's a lot of regulation around it. You want to be intentional. So we made sure to bring in a partner. And in this case, Goldman Sachs investment banking helped us out. And so the first conversation really was with me and the CEO, a couple members of our board, a transaction committee, and the partner at Apex, where we talked with Goldman Sachs about all the potential investors, all the potential private equity firms or sponsors who might be interested. It's a pretty big list. And then that team starts to help us navigate. They have conversations, they have connections with other board members or CEOs and CFOs, and they start to navigate that. And then what we would get back is a list of, hey, here's all the folks who are interested, and let's have a conversation. And that next conversation would be with me and the CEO, or maybe sometimes just the CEO, have those first pass conversations. But yeah, Goldman Sachs and then our board members and our partner at our private equity firm started that first pass with us to say, who would be some of the best folks to reach out to, whether they're other private equities or strategics. And we partnered together to come up with who those best folks would be.
We wanted to, initially, we're going to talk about AI with you, and we still hope to do that. Wondering if from the last time we talked, it seems like everyone's become part of the conversation. And just wanted to have you perhaps reflect a little bit over the last 2 years, or since some of these language models became top of mind for so many organizations, whether you as a CFO, set any guidelines for the organization as they began to adopt these language models and ask you for licenses and, how do we do this? What, did you have any, as those conversations became more central and you realized the potential of these models more fully, can you give us a sense of what was happening within Paycor?
Yeah, I remember the day that ChatGPT dropped, and I was in an investor meeting, and one of the investors brought it up and said, hey, have you seen this yet? And I hadn't seen it. It was the first day. And I remember from that moment, though, when it started the message, that I was like, wow, this is going to be different. This could really change some things. And I started pushing actually right away back into our product organization. I remember some of the early conversations like, hey, yeah, that's interesting, but it's going to be a little while. And it has taken a while. It's taken, I guess, 2.5 years since that point. And we've made a ton of progress, but there still hasn't been a ton of B2B, like internal process, like complete reimagining because of this. But it's definitely been exciting. And I think there's a lot of cool areas like research that we've been able to leverage internally, some of the co-pilot type things. But I think you're right. You have to be a little cautious. One of the first things that we did was we stood up an AI council that helped us just think about all of the different items that we should be considerate of, that we need to be thinking about from a regulatory perspective, that we're still, unpacking how to think about the models and which models to use, or maybe which ones to stay away from. And then how do we get it out into the organization effectively and responsibly? How do we start to get it into the product effectively and responsibly? And so that was our first step, was really starting with that AI council. One of the things that I've also really gotten into, though, is to encourage people to try things and do things. And, we got to create the right security model around it so that we're not pumping data out into the live, web. But internally, we're using these models and saying, hey, where can this work? How can we be a little bit more aggressive? Maybe let's try a couple things. So there have been some of those licenses where we've tried to get a little bit more aggressive, pilot some stuff, see where we think the opportunity is. And it's one of the reasons why in some cases we say, hey, let's go a little slower here. We're not seeing quite the benefit. And there's some of the models that software applications came out with really high priced AI fees right out of the gate. And we said, we're not doing that. We don't know what the benefits really could be. Let's pilot it. Let's slow it down. And then you saw some of those applications actually change their AI pricing strategy afterwards and said, all right, maybe we're not going to get the same fees that we thought we were. So we've tried to be really intentional with this combination of piloting, trying, testing things, and then putting some money down on some things to make some progress, but be cautious.
Where do you see the strategy headed, product strategy headed within this organization as AI clearly becomes more impactful?
Yeah, so I should say that Paycor is a human capital management software business that focuses on companies of all sizes, from just a couple of employees to thousands and thousands of employees. And we manage HR software, payroll, talent, performance management, talent attraction. And we really focus on enabling our customers to get access to people, data, and expertise. That's how we think about it: people, data, and expertise. And I also think that the direction of software is changing. The application software is changing. At Paycor, we're thinking about that, saying, where is AI going to take software so that we can leverage that to enable our customers with the same core workflow functionality, but maybe the experience is different. Maybe that application layer is different. And maybe we can simplify it. Maybe we can improve it. And so we're really thinking about the way that application layer is going to change as customers' expectations are changing because of AI and the way that software works. So we're really thinking about AI embedded within the product capabilities to make it easier to navigate, to make it more intuitive. We've released, or we're about to release, we have it in pilot right now, an HR assistant that is a chat assistant that enables you to be able to access with your own business's voice, right? That knows your people, access to the information, access to data within this, what can be a complicated regulatory and complex HR framework that employees have to manage through. So we're starting with that HR assistant that ultimately we think will help employees navigate the system more effectively and engage in workflows for their employees. So that's where we see that going over time. And we're continuing to invest in that even while we're going through the integration work.
You mentioned that when you saw ChatGPT, you realized there's something more to this. I'm wondering, as a finance leader, though, did that lead you to begin developing frameworks to understand better where to make investments? Was there anything more specific you could share with us, how you might have, give marching orders to your finance people who are experimenting or championing language models in some fashion? I don't know. Is there something more you can share with us about how your AI philosophy was beginning to be revealed here?
Yeah, I think for me, it started with, I don't know how this works. Wow, how does this work? And I started there because you can sort of put some prompts into these models and think that it's magic, right? It's magical. The experience could be magical, but it's not magic. And so I started down this path of how the heck does this thing actually work? And of course, I'm still learning, and I'm not really a software or tech guy, but I like the software and I like to understand how the technology works. So I did start to get into it. And actually, there was a recent video that Andrew Carpathy released, it's on YouTube. It's like a 3.5 hour video. He's a founding member of OpenAI, and he's founded his own lab now. And so he spent like 3.5 hours going through how these models work. I think it's a really great overview. But that's where it starts in my mind, is what is this software? Because it's just software. What is that software actually doing so that we can start to point investments in the right space? And right when things opened and we started to think more about LLMs, a lot of the first question about investing was, should we be building a model? Let's go build a model. And of course, as we've gotten over the last couple of years, building foundational models would have been a terrible investment for us. We would have lost all of our money on that. There are some really amazing companies like Google and Facebook and X and OpenAI who have these foundational models, and that's a race that we don't need to be in. the application layer and sort of the inference side of understanding how these LLMs work clearly started to become more and more where application software should be investing. How do we take the inference side of using these base models and then enable it for customers to do cool things that our customers need based on, the services and the offerings that we're working through and that we're offering. And then understanding how agentic AI and this next evolution of leveraging different types of AI models for the most effective potential outcomes, and then being able to build them into workflows and get these models to talk together, that really has become, I think, where the future of AI is going to go. And so I say that to say that if you didn't know how those models were worked or how they worked or the structure of the underlying technology, you just start pointing this thing at everything. You can say, well, maybe this LLM will do this, and let's go try it over here. And when you start to really get into it, you realize, hey, this is not a space that we should be investing in here. Let's try to point and look for some use cases where inference might enable us to be more effective. And then you can go into the business with a more targeted approach to your business case development and more targeted approach to getting the quality out that you need. Otherwise, you'll just be, running up consultants and spending money, and most likely the project won't succeed. And you'll say AI isn't worth it. But it's just because you're missing in the right areas. Or in the wrong areas. You just got to be really focused and targeted, and you have to understand the capabilities at its core.
Nice. Thank you for the extra detail there. It's just an interesting place and time because we'd love to understand better. We in the past had talked about how you had sort of organized your FP&A team or how you had used those people. And, this is a team that's very aware of how Paycor customer behaviors, the whole customer success model that you helped architect and put in place with your help of your FP&A people. If I'm overstating that, or if you see it differently, let me know. But these people are very skilled in understanding, customer churn, customer renewals, understanding what the behavior signal. And here there's another FP&A team that's skilled with another sort of customer relationships at a different level or different types of offerings. And, how these individuals who really are so tight with understanding customer behaviors and what have you, am I characterizing that correctly? Do you see it differently? Or if you were to describe Jack, you're describing more our customer success people than our FP&A people.
Yeah, I think that you're describing core capabilities that exist between both our customer success and analysts that sit within our CX organization and the core FP&A capabilities that we have. So those teams working together really well are important. Understanding the data, getting the data in a way that enables you to make more and better business decisions around customer sentiment and stuff like that. That is what the core that is. I wouldn't say that our FP&A team necessarily is closer to the customer than our success team. Our success team has been fantastically built up to have those individual interactions. The FP&A team really helps them to understand, well, how are those interactions potentially translating to, what we might think about as churn or future losses or risk inside of the portfolio, giving us better visibility so that we can either get ahead of it or plan more appropriately for it. But them having a really good relationship, the CX team, our success team, and our finance partners enables us to make better decisions, I think, and they structure the data and our initiatives more effectively to get the long-term outcomes that we want.
Well, and just what you just described, that whole, for the lesser of a better way of describing it, apparatus that has been finely tuned over the years. You know what I'm getting at? When you merge two companies, so often we talk about the workforce at large and possible redundancies. But here is this very delicate, fine-tuned machine that allows you to have visibility into the most sensitive relationships there are. And that, in my mind, when I think of acquisitions these days, just having talked to finance leaders about trying to perfect what, here's where we've been basing our time, looking at the data, working with this team that you just described, and I'm rambling on here. But my question is how do you, make certain that delicate remains intact, that delicate process apparatus remains intact during a merger? And how do you not lose or forfeit a piece of it or take your eyes off the ball inside that world that you have really put so much emphasis on fine tuning and getting where it is today?
It's definitely a risky and difficult part of bringing these two organizations together, right? Any two strategics, you're going to have natural overlap in roles. You're going to need to hit synergy targets. You want to be more effective longer term. And there is a risk that you cut the wrong things, that you reduce capabilities. And so I think one of the most important things in this case is starting first with your people and saying, who is on this team? And let's make sure that we have the right understanding of the business process, the technical capabilities, and our impact on the customer, right? If we mess up the impact of the customer and we negatively impact it, it's going to ruin everything. And it makes what could be a really great strategic and financial outcome on the business side, it makes it, worth nothing. So it has been part of the talk track every time we think about, all right, we have to bring these two organizations together. Unfortunately, there's overlap in roles. Let's make sure that we're intentional about it. Let's not be flip here. It's you're impacting individuals, you're impacting our products, you're impacting potential customers, and let's make sure that we minimize that risk. That is the first thing that we get after. And so we're clearly spending a lot of time thinking through the tactics of the integration and how teams come together. But also with that same focus in mind across all of the teams, it has enabled us to say, or encouraged us to say, let's not go too fast. Let's make sure that we're being intentional, and let's make sure we're impacting the right things as best we can. And I have no doubt, some things are going to be rough. We're going to miss something. And then how we quickly respond to that will be important. So keeping that customer lens first and that focus first is going to be important. And where we do have capabilities that maybe we're impacting, that we say, hey, we need this capability somewhere else. Maybe it doesn't exist here in the go forward state, but we need to create that capability somewhere else so that, to your exact point, it can persist and we can have the right visibility of the customer. We make sure that we understand our impact on the customer and that we keep those, things tied together with our success team. So that's actually something we're going through right now, is making sure that we don't reduce capabilities that really help us provide a better customer service and a broader experience.
In your view, and we can talk a little bit about the realm perhaps, where do clients and partners stand to benefit most from the combined capabilities of Paycor and Paychex?
Paycor has built a fantastic modern, what we would call mid-market platform, but we span, 10 to multiple thousands employees. We've gone really deep inside of our talent solution, talent capabilities. We have a fully scalable payroll capability. So the full suite of HCM solutions with this target market that we've been working towards over the last 5-7 years. And we're a 30-year-old company on top of that. I think one of the benefits that we bring is this natural marriage with Paychex, where they have focused more primarily under 100 employees. And within that small market, going to market through CPA partners, they're a 50-year-old company that focuses very clearly on enabling businesses to be successful. And so when you bring these two mission statements together with the capabilities, you have a complete view now where we can be the number one HCM provider in the entire market, right? With really deep capabilities and a full suite of products to small customers, mid-market customers, enterprise customers. And I think that that's really compelling. It's compelling where we've gone from about 3,000 employees on Paycor and 16,000 employees at Paychex, and now nearly 20,000 employees combined. That gives our employees an opportunity to continue to expand their career, move into different roles, continue to grow across all these different areas of the business. And it also gives our customers this ability to continue to navigate through the products. If they want to continue to grow their organization, they feel like Paycor has deeper technology products that they want to get into. Now they don't have to leave Paychex more broadly. And if some of the solutions that we offer aren't necessary for that customer, now they have a platform with Paychex that can be more effective. So there's really a lot of great synergies for our customers up and down the stack. And then being able to wrap a service experience and product experience that even goes outside of HCM software, because Paychex offers a complete suite of additional services and products, is a natural win for our customers. So we're really excited about that marriage. I'm not sure that there's another better opportunity than for Paychex and Paycor to come together in this HCM market.
All right. Well, we'll wrap up, Adam. And I wanted to say, okay, so 5 years into the future, would we be surprised to learn? Would you be surprised to learn? You're still in the C-suite, but you're not the CFO. You're the CEO. Would that surprise you? Not of any one company. It could be who knows what this company is, but you're in the C-suite, but you're not the CFO. Does this surprise you?
It wouldn't surprise me. No. It would be exciting, and I hope that that's a direction that we continue to go, or I could continue to go in my career, having a bigger impact, caring about the customer and the employees with a deep understanding of the finance operations and how the business works.
Would it surprise you that it would be the potential of an entrepreneurial venture in 5 years, maybe 7 years?
I'm not sure. I would be open. I'm not sure that I would be surprised at anything. I think there's a huge amount of opportunity in front of us with right now, for me personally, and for our team with Paychex and Paycor. So I'm really excited to see, where this goes. And I think there's a lot of really great work to be done around both this role and then with Paychex more broadly. So I might say that I might be surprised if 5 years there's a different place that I'm at. I think I probably would be.
No backtracking here. Adam Ante, thank you for joining us on CFO Thought Leader.
Jack, really good to see you again. Great talk.